Greetings to all, let's go to the main topic of the day. My dears, everything is fine, with which I want to congratulate all of you from the bottom of my heart. Bitcoin is finally where everyone has been waiting for it. Altcoins are not quite there, but they still have everything to come. The total capitalization is growing. But there are some strangeness, which will become clear now. But in general, everything is going as well as possible. Now all that remains to get a clear picture of what will happen next. And we are not interested in long-distance targets. But quite specifically, what will happen in December, January, and possibly in February? This question is asked too often on our channels and chats. So this video will be the answer. I think many of you still remember well the ascent of Bitcoin at the end of the 17th. Like this year, right before our eyes, something similar is happening. The reasons for the current ascent, well known to everyone. The notorious institutions and the spring halving. This topic has been thoroughly chewed on in the media, so let's not be distracted and talk about what they generally prefer to keep silent about due to the fact that it is not customary to talk openly about financial reporting. Especially in crypto. It's a little strange. But fact is fact. No matter how loudly many shouted at all corners that regulatory financial accountability and the crypto two things incompatible. But do not confuse the desired with reality. And especially against a backdrop of the current euphoria about large institutional investors who have come to crypto. Do not forget that tax or financial accountability to regulators plays a major role in their investment strategies. If everyone is singing about what institutional investors should be thanked for bringing the price of Bitcoin back to its former heights, it would not hurt to understand what incentives can be hidden behind their financial injections, which are directly related to their everyday financial reporting. Greetings to you in reality. It should also be noted that not only large, but also medium and even small investors are burdened with regulatory obligations. In order to sort out all this and answer the question, what will happen to Bitcoin and altcoins in December, January and maybe even in February and March, we need to analyze an interesting topic, payment of taxes by people from the income received of trading crypto. Let's take me as an example. I am subject to tax accountability that operates in Europe, and therefore the same as in the rest of the economically developed world. In other words, my accountability is exactly the same as that of those institutions that threw Bitcoin where it is now. For clarity, let's take the Bitcoin.de platform, which is very popular in countries such as Switzerland, Austria, France, Italy, Belgium, Holland, Germany, etc. I have been trading on it for 2 years and quite successfully. But in the end of the year, this success sometimes turns out to be not entirely pleasant moments. Namely the payment of income tax. Let's take a quick look at how it works. 1. Credit card. In order to trade on this platform, you need to link a specific bank credit card. In this case, a credit card from the online bank Fighter. Of course with full verification. Why is this so? 2. Income tax 25%. Because according to European laws income tax from trading stocks, derivatives, securities or crypto is held by the bank itself and any bank in automatic mode. This tax is levied by the bank from any client with each sale of certain stocks. And at the end of the year it is recalculated again. The debit with credit was compared. After which the final tax amount on the total income for the past year is set. It is equal to 25% of the income amount as C. Everything is pretty simple and transparent. In other words, the European Union makes a trade once a year with a profit of plus 25% from everyone who trades stocks or crypto. And without entering into risks. Well, commendable, anyone should seek for this trader. We really need to make about 40% of the profit, so that after taxes and other commissions, we will have our 25% profit. How can the tax be reduced? Now, how to lower the tax? That is, what should I do, as a trader or investor, in this situation? The answer is simple. Buy stocks or crypto for all the proceeds from trading. And not go to fiat until the new year. This is especially true when a particular market is not portends a strong collapse. What would be the specific numbers in my head? Let's take a specific example. I bought Bitcoin at $12,000 and could sell at $20,000 right now. In this case, I will pay $2,000 in tax from $8,000 profit. It's the same as if I sold it for $18,000 tax-free. Will I do it right now? No, if there is confidence that Bitcoin will not fall below $18,000. And for a long time. And yes, if there is every reason to believe that Bitcoin will fall below $17,000 by the end of the year. But if Bitcoin still resists and I sell it at the beginning of January, then I will postpone tax expenses for a whole year and thereby save $2,000, which I use to buy the same Bitcoin if its price drops significantly in January or February. From this follows that going out of crypto to fiat at the end of the year it is extremely unprofitable, especially for big capital, and it is absolutely regulated. It turns out that the price can really be held by institutions until the end of the year, because all those who have hidden their capital in Bitcoin benefit from this. The same goes for some of the big altcoins and stocks. Well, this is a very specific and rather strong incentive. Therefore, there will most likely not be significant Bitcoin crashes before the new year. To test the performance of this concept, let's turn to history and look at 2017, 2018, 2019. After all, the regulatory principles were already exactly the same as today. And institutional investors were present then, too, although not to the same extent as today. It is worth recalling that 90% of all capital that goes into the crypto space comes through credit cards. And this inevitably leads to a tax on profit. Both then and now. Here is December 2017 to January 2018. The volume of total capitalization increased from the end of November to the beginning of January by plus 205%. This is more than 2 times more powerful than we observe today. Seemingly weak institutions this year. But maybe still to come. Then, in January-February, as you remember, everything collapsed by minus 65%. Here is December 2018 to January 2019. A year later, in December 2018, the total capitalization increased by plus 48%, then fell by minus 24%. The trend is not so bright, but it is there. Rise by January, decline again by February. Here is December 2019 to January 2020. And a year later, in December 2019, the total capitalization increased by plus 55%, then fell by minus 20% by February. And then in March COVID-19 came, and followed by a fall by all minus 50%. Back to today. Now the most interesting question is what will be after the current fiscal year closes. This will already depend on market conditions in January and February. If the price of Bitcoin and the total capitalization begin to rapidly slide down, this will cause a chain reaction among the majority of investors and traders, as it will become clear that capital saved from taxes began to flow into something more promising for the moment. And what may turn out to be more promising specifically for institutional investors. Within the crypto market, it may turn out to be altcoins, which are now at the very bottom. Or the same stocks or even gold. Note that it is now also slightly undervalued. And this, of course, can be used by others. It is quite common practice for professionals to move from one hedging asset to another. After all, Bitcoin today is considered along with gold precisely as a hedging asset. The same assets include the stocks of some leading companies. And even some altcoins. In this context that I want present to you our hedging asset, developed by our traders and economists on the basis of an independent blockchain, of course, decentralized. Olbitex token is a proof-of-stake consensus. It stakes 3 million coins mined at this moment. Total supply is limited to 21 million coins, just like Bitcoin. It is quite a rare case when a stake coin has such a total emission limit, so don't miss the moment. Links to the website, Explorer, Telegram groups, etc. you will find under this video. I especially recommend that you take a look to the white paper. It is presented in 7 main languages. There on the site you can download a desktop wallet for installation on PC. And stake as much as you want. Questions for larger purchases are considered directly by our fund of traders and investors Olbitex Network Development Foundation. So, now let's get back to the current situation, because we are still not finished with it, and we may have some pretty sweet gifts for the new. Let's look at the total capitalization at the peak of the beginning of 2018. It is equal to 824 billion. But today? Almost 570 billion. We are still not gaining 254 billion in total capitalization. It is clear that the institutional investors invest mainly in Bitcoin. But although now they have already crossed over to Ether. But what will happen if suddenly, following the logic mentioned above, they still begin to fill their portfolios with major altcoins too? Especially if they notice that Bitcoin at some stage will begin to slip and go into a protracted flat. And even with a downtrend slide? The answer is pretty obvious. The much anticipated altcoin season will begin. Perhaps not as powerful as in January and April 2018. However, the total altcoin capitalization may well double, which for some altcoins may mean a 3x growth. What can double? Let's consider. Well, I see. Livecoin, Link, Bitcoin Cash, BNB, Dash, Monero, Filecoin. Ether, I think, will add only 75% of today's values. What can triple? ZRX, Nano, Matic, OV, DLT, Atom, Go, Tron, KNC, Tomo, and many others. As you know, we have been trading most of these coins together in quite some time, posting the main signals on open channels for free. I would like to note, at this moment we have a duplication of signal data in 7 more languages, which are presented not only in Telegram, but also on Instagram and Twitter. A complete list of links is presented in the description of this YouTube channel. Of course, this scenario, altcoin season, will be relevant if Bitcoin keeps its positions within the range of $18,000 to $21,000 by the end of this year, which is most likely for the reasons stated above. But as we know, there are also surprises. The most interesting will begin in January-February or a little bit later. There are equally possible several scenarios for the development of events, and the altcoin season is only one of them. We will talk about this a little bit later. When we are there a little closer. When asked how much Bitcoin can drop in the event of a fall, I will answer the standard. Half of the current highs. This is also its fairly standard behavior. In this case a correction to $10,000 is possible. In conclusion, I would like to present our YouTube channel, where useful videos regularly appear for those who intend or already own our Olbitex token. I advise you subscribe. I would like to note especially the last video about installing Olbitex wallet on a system USB flash. Being autonomously stacked, this futures is expected to show progressive outcome, but more on that later. And for today, thank you for your attention. You are the best. I wish you all the maximum profit and thank you for being here.